recording. Hope everyone's doing well. Obviously, welcome to Masterclass. I want to say Masterclass 5. Masterclass 5, I believe so. Let's take a look quickly. Yes, it's number 6, actually. No, Masterclass number 6. So obviously we've had structure, we've had reading price action, we've had a trading plan, we've had risk management, and we've had psychology. So this will be our first one really actually on a particular tool on the charts. So it should be a good session. Let's see what questions we got here. I used to a lot, but didn't work out too good. Okay. Fibs with candle confirmation. Cool. Fibs work for me when backtesting. I often use history as an indicator to where it will retrace to. Improve entry area. Fantastic. Fibs without a breaker structure usually fail for me. Of course, definitely. Okay, so a good mix. So obviously today's masterclass is about the Fibonacci. So we're going to start straight away by jumping onto the whiteboard firstly. So jump onto this whiteboard and essentially I just want to get on the basics. Now I'm not going to go into obviously, the Fibonacci sequence, why obviously it's respected and how you can find obviously the Fibonacci sequence within nature and within quite a number of things or where it originates from. Because one, I don't have that information in my head right now. And two, for me, it's not relevant, really. It's not relevant to what I'm going to be showing you. So what I'm going to try and show you here and what I use Fibs for and what I believe majority of people use Fibs for is to measure the leg, right? So we have, let's say we're in a bullish market, just for example. I'll just move this out of the way. Let me just open the chat up so in case you guys ask questions, I don't miss it. Cool. Put that over there, get rid of this. Cool, perfect, ready to go. So as I was saying, so you're measuring, so we're in a bullish market and price with the significant low point being here, significant high point being up here. So essentially what we're using the fib for is to measure the length of this leg. So that's why 100% is obviously normally at the bottom, 0% is at the top, all right? So essentially what we're doing is we're measuring the entire leg of that one wave, that one movement, that one piece of structure, if you will, whatever the terminology is that you use, okay? And what we're trying to do with the fib is measure how big the retracement is, the pullback is, to then go to our next extended area and targets, all right? So when we measure with the fib, normally what majority of people look for is what the 61.8, so I'll type that here, the golden ratio, as they say, 61.8 and 78.6%. Okay, some people have, say, for example, the 71%. Some people I've seen have the 88%, so on and so forth, right? Now, I think majority of people do use the 61.8, 78.6. That's the golden ratio, as it's known as. And we have obviously 50%. I think above that, there's like 38.2 or something like that. Just off the top of my head, I don't use these other ones. But these are normally the ones that come preloaded onto the actual fib when you first load up your trading view, right? Now, it's up to you how you use these, but first understand what they're representing. So 38.2, that is literally saying if price was to retrace, obviously from the high, so you've measured the whole leg to the 38.2% level, it means it's retraced 38.2% of the original 100%. So not a big retracement, essentially what that means. So let's say, for example, if price was to retrace it and reject, it just means that the overall momentum is extremely strong to the upside, that price did not need a deep pullback to then continue, just for example. Okay, 50%. Now 50% does get respected quite often on different pairs. From my memory and the ones that I have used, we are talking the gold and GJ. Okay, those two in particular, from my analysis and back testing over the years, 50% does get respected quite often. Why is it on those pairs? I cannot tell you. However, through your back testing, you may realize X pair, CAD yen or Euro GBP or whatever pair it is that you trade, many people may not, other people may not trade. You may recognize that it respects the 38.2, or it respects the 50%, or even the 22, or whatever percentage and levels that you have on your fib. It may respect that more for you, and you're recognizing that, seeing a pattern in that, and you then start using it and getting results from it. Fantastic. Just like with everything else, so there isn't much of what works for you works for you. So that's not what I'm trying to show here. What I'm trying to show here is how I use it, and really trying to break down why we use it, or what would the use be out of the Fibonacci tool. Okay. So again, for 50%, if that was to be respected, what does that mean? It means out of the whole move, so that whole piece of structure, that one leg to the upside, price retraced 50% of the way, 50% of that overall leg, which would roughly probably be, if you're eyeballing it, around that sort of area, before then pushing and continuing in its overall direction. Okay, cool. Same with 61.8, 78.6. Now, I do believe if you were to obviously do some statistics and backtesting over the long period of time, over a number of pairs, that this area would be the most respected overall, right? And that's why we call it the golden ratio. Now, to be honest, on my fibs, I believe I have these three mainly. I might have this top one as well, but we'll see in a minute, to be honest. We'll see in a minute. Now, the same with the targets, right? So essentially what the targets are measuring is, if you notice on the fibs, it says like 100 and, minus 26 or minus something, 61.8 or minus 27.2 or something like that, right? And it's basically doing the same thing. So it's measuring, if you do get a, 50% pullback, the next leg is actually 50% plus whatever the first initial target, and then obviously the second target is. Right, so it's measuring against what, not only is it trying to measure the length of the initial move and then the measurement of the pullback, but then also extension into obviously its new leg, right? And how far it will overextend for you to then set your target. So now what I like about fibs, okay, is that you can set an entry area, you can set stop loss, and you can set a take profit. Now, why would I say that is what is good about a fib? Now, the reason why I say it's good is because majority of people struggle with setting an entry, or knowing where to enter, or knowing where to set a stop loss, or knowing where to set the take profit. And that's why I like the fib so much, because it gives you it meets that criteria. And don't get me wrong, as many of you have said, it might not work for you all the time, or maybe not even give you the results that you're after, which is fine, because it means that we have to look at other things, right? Or we need to look at the reason why it's not working for you. But overall, this is why I enjoy it. This is why, I see results, right? Because I see a clear tool that can be used, for setting your stop loss, your take profit, and your entry. And I think that's really good and beneficial, especially to many of the traders. Now, do we have any questions on what I've said so far? And by all means, let me just say, from the very beginning, that even if you watch this webinar, and maybe even if you kind of get what I'm saying and you kind of maybe want to try out the fibs, by all means do so, but back testing, please, and on demo accounts or without live trading straight away. Because again, this is something, now that we've started to dive into actual tools on the charts, rather than just principles of psychology and obviously trading plans, things that are kind of universal. And yes, there will be changes from trader to trader, but every trader should be using some form of stop loss and some form, not stop loss, sorry, but like risk management, and using some form of trading plan, etc. That's what every trader should use. There isn't really too much of a debate on that. While on fibs, there is a debate, obviously. People use them differently, people don't use them at all. So I want, as we start to go into these different tools, for you all to understand that it's your choice whether you want to use that or not. If you just want to attend the webinar, see if you pick up anything, fantastic. That's absolutely great. And, continue to do so. But if there's, for any reason, you're attending and you think you need to use that just because I've talked about it, you don't. Because some of the things that we will talk about, I don't even use. But I just know that as a general community, traders are using, say, trend lines and channels and maybe, I don't know, head and shoulders or double top, double bottoms, whatever it may be, right? I may not use them, but I will still explain them. Fib is something I do use. If someone's going to ask that question, it is something I use quite on a regular basis as well. But I know that many traders don't use them, or that it doesn't work as well for many traders, which is absolutely fine. Any questions, like I said, so far on anything that I've gone over? If not, we can. I'll get on a chart. Let me see if I've got a chart open. It's ready. Quickly check. Probably use this Euro GBP from here. Yeah, I think I've got a chart here. Sorry, I'm just gonna pull up the Zoom again. Riz, do you measure from wick to wick or body to body? Cool. I'm going to go over that now. So this is, again, another thing that is, oh, let me pull it through to the front here. There we go. Everyone see my chart? Let me just pull up the chat again. It's disappeared. There it is. Can everyone see my chart just to be sure? Yep, perfect. So now let's pull up the fib. So I'm just going to quickly pull it to one side. And what I'll do quickly is, if you want to look at the way I've got that set up, just in case you wanted to copy or needed to look at the settings. Here we go. So as you can see, most fibs, if I'm not mistaken, come actually with a lot more of these ticked on and looking very, very different. Having a background is one of the things. I don't know if it will do it right now. Ooh. No. Oh, wait, I haven't got it ticked. Yeah, so when you first load it up, it will have like some form of background. So if you need to get rid of that, you just get rid of that. Prices, levels, percentage, labels, etc. Am I late? Yeah, I started slightly early today, Asim. I put it in the group. I started at 4 o'clock just because I had the availability. But it's all recorded anyway, so no worries. So taking a look at this, like I said, so I actually have these extensions on that I don't really use too often, and most people don't really use them, I don't think, but they're on there anyway. But I have all these other extensions. So I have obviously the 78.6, 61.8, the 50, and 38.2, which I'm not going to lie to you, I haven't really used in a very, very long time. So don't really need to have that on there. But I'll leave it on there in case, obviously, you're, again, one of those people who do use it. No problem. Minus 27.2, minus 61.8, and so on the flip side. Okay, so that's the settings. Obviously, that will be in the recording, should you need to use it for any reason. Okay, now let me get rid of this fib. Okay, and let me zoom in over here. Okay, so now looking at the daily time frame, what can we see has happened on the daily time frame? Obviously, we've had this significant low that is formed here. Let me just get rid of the, I'll just leave it on. So significant low, we take that low, we place our fib to begin with, and we go to significant high. Now, I personally use the wicks. Personally, I do, because that is price action. Okay, so I will go from the significant low, and as you can see, we've just missed it there. So if I go on this magnet tool, it will actually stick it to the wick. If that's where I want to sit it to, and same on this flip side. So I will use wick to wick. Why? Because that is price action at the end of the day. Okay, it's not like the wicks manipulation or anything like that, or it's fake or anything like that. Don't get me wrong, sometimes news can make a huge spike, but at the end of the day, price went there. That was the significant low that was formed, and that was the significant high. So as we can see with this price action, setting this from low to high, price has come into that 61.8 area, right, which is actually tapped. And if you will, on the daily, we've had a reaction today from that area. Not saying that it's going to go higher, but just saying we've ended up reacting from that 61.8 today. Okay, which is fantastic. And what does that mean, though? Again, if we just break it down, what does that mean? So of this whole move, right, the 100% to 0%, that whole move, we have retraced so far 61.8% of that. Okay. Now, if I was to take a trade from here, just out of example purposes, just based if this was my strategy, I take a trade when it taps 61.8, I put my stop loss, I don't know, let's say that's 76, 15 pips above, so say 100, just for this example, 15 pips below, the 78.6 in this scenario. And obviously my target is obviously the first extension, right? So keeping that in mind, that still fits a 1-to-3 minimum risk to reward ratio. If that was part of my plan, fantastic. It means that obviously if it breaks below the 78.6, don't get me wrong, it could wick below, but let's say if it broke below and took me out, it would be invalid. My fib would be invalid, which would probably end up potentially resulting in structure going invalid and structure breaking. Because a fib, and another reason why I like it quite often is because you normally use it in line with structure. So you're normally measuring obviously a higher high, which is what's happened here, and obviously taking the most recent low and creating your Fibonacci sequence, which you're then hoping for a higher low to be formed potentially within our golden ratio, golden ratio area, 61.8, 78.6. And we've highlighted that area. So for example, let's say if I was trading, swing trading or position trading, and, I'd seen this form, I don't know, we started a slowdown. I didn't even click the right button. This one. Not working. Interesting. Don't know why that's not working, but let's just say we're over here, right? And price came back to here. Then I would be waiting. So I wouldn't have to watch the charts constantly. I could set like an alert and wait for price to approach that 61.8 area. Fantastic. Now I can then look at a lower time frame. So going to the 4 hour, for example. And what we can see on the 4 hour here is we haven't broken structure yet on the 4 hour. We're still higher, lower high, lower low, lower high, lower low, lower high, and you could say higher low for now. But we'll see, right? We'll see. It's Monday. But what we would then be ideally waiting for before we enter, if we're using the fib again, is that, okay, we've reached our 61.8 area. We've slowed down. We haven't broken structure yet, so we're just waiting still. When that 4 hour structure breaks, and then we can get a confirmation that it then makes, say, a higher high than higher low. If so, for example, let's just try and paint the picture for us. So say this broke higher, cool, then made a higher low, rejection, and we got our entry there. Now, let's say if we did, okay, let's get rid of this, let's move this up. Say we got our entry there, we can then put our stop just below the low, let's just say, for example, and then obviously take our trade accordingly to our first target, which for me, I would always say first target would obviously be a double top scenario, second target being our first extension, and then third target being our final extension, okay? And that's where see how the fib is allowing us to have not only our entry criteria or area that we're highlighting, but also our stop loss placement, and then also our take profit, and giving us 3 additional targets as well. And that's why I like the fib personally. Now, please do ask any questions if you have any so far. I know someone did have a question before the webinar where they asked me, how do you know to hold a trade to your 61.8 area, which I will go over shortly. But any questions so far? Because there isn't really much to go over on fibs personally. I do believe, this is pretty simple stuff. I will go over quickly whilst anyone's asking any questions. Okay, during this scenario here, you can see obviously we have the low, lower, high form, right? So we could take the low to the high down to the low. And as you can see, price came into that 61.8 area again, and then sold off into our first target. First target just so happens to align with the 61.8 on the daily time frame, which is a nice confluence for us, and is a way for us to then try and take an counter trend trade while waiting for our overall analysis to work out, if that's something that you do as part of your plan, and only if. Okay. So as you can see there, yeah. Now what we can do is we can take the previous low, so being here, previous 61.8 rejection, down into the low that we've made at the moment. And as you can see, we've rejected from the 61.8 on numerous occasions. I think we would have used this one here as the first tap. 61.8 on numerous occasions, that minus 27 just shy of the 78.6, which is nice as well, good confluence as we follow the structure still. So a couple of questions here. Do you only draw them on the daily time frame, and what time frame is best to use? So perfect. 2 questions similar. No, I don't only use them on the daily time frame. I'll use them on all time frames. So weekly time frame, same thing. As you can see, higher high, higher low, right? If I was to, for example, go back to when price shut off from taking from low all the way to significant high, where did price react to? Came all the way into the 61.8. And within that 61.8, 78.6 area before obviously going to the upside. So let's say, for example, this was to continue its run to the upside, and I was using this weekly fib. My first target would obviously be the double top, 95, and then second target being 98,447. Yeah. So that would that's the weekly time frame, right? And then within that weekly, I have a daily, and then so on and so forth. So again, this is where your chart hygiene and keeping your eye on structure comes in, because the last thing you want to do is have fibs everywhere. You want to be using from significant low to significant high, because I could easily have this one and then this one as well, and probably these little ones in between on the 4 hour. But instead, okay, on weekly, if I'm using the weekly time frame, I could take the whole move and do something like that. But I'm not position trading, right? And at this moment, I'm not even swing trading, so I don't need to. I'm day trading, I'm intraday trading. So what do I need to do? I need to look more at price now. So I've highlighted obviously the weekly here. I've highlighted obviously the daily here, which is the same move. Perfect. Now, as I go to the 4 hour, I can see we're in that same move, so that's fine. Or what I could also do, for example, is something like this. So if I go from the significant high down to where the significant low is before reaction right now, we've tapped into 61.8 and slowed down just ever so slightly, right? Which could then lead us to slightly lower. That's a nice confluence, all right? If we're going from last week, we can go from the high down to the low again of last week on the Friday, more than likely. Yeah, and we had sell off, come into and reject the 78.6, and see how coming into this new week, we haven't continued that fib yet. But if that comes through, then that would be that would be a good example. I sometimes use fibs on the 4 hour and it doesn't retest, it simply bounces. Do you think it's safer to simply use it on the daily? I'm not sure what you mean. So it doesn't retest. What does that mean? Retest. Does that mean, let me see, for example. So are you talking about like it has one rejection, doesn't have a second one? It just kind of has one rejection and continues? Because that's fine. Because on a 4 hour, that might be what it looks like. But then when you go to the hourly or 30-minute, it's actually a breaker structure retest. So it might be a case where you have to then go to a lower time frame. Because if you've used it, it's just like top-down analysis. If you use it on a 4 hour or daily, or like this one's from the, sorry, let's get rid of this one quickly. This is from the daily time frame, right? So I'm not going to just enter here just because it's tapped the 61.8. No, right? I need to wait for that. And that's why I said that example, wait at the breaker structure on the lower time frame. So I'm not going to wait for the daily breaker structure, because if that was the case, if it would probably have to be all the way up here before I then take a trade, because this is too choppy on the daily. On the 4 hour, however, right? On the 4 hour here, what you can see is prices slowing down and still making lower high structure, right? So I can't make changes to that, right? I'm still waiting. Oh, damn, that's nice. Yeah, good to see you're also using 0.0 as first TP. For my backtest users, reached a lot more than the 27. Cool. What about 100% retracement? Seeing them happen a few times. Could be a double top, double bottom within the trendy market. Yeah, again, so this is where your own backtesting and your own trading will come in. I don't really use 100% retracements. I wouldn't be looking out for them. I'm sure they do happen. I'm sure the opposite happens. I'm sure they probably go from all the way from the top all the way down to the bottom, making an extension. I'm sure that happens too. But this is where, again, you take these tools and you go back test them and you go work out what's best for you on that particular pair. So as I said, different pairs will move differently. Different pairs will respect different levels differently, which is fine. No problem at all. That's where just we have to do our analysis and our chart time to work out what's best for us, which strategy is going to work better for us, etc. So yeah, what was I talking about? Just before that, I was talking about the fibs. So yeah, so taking significant high to low, and sort of there was a question someone had. Sorry, the timeline wise. So if on the 4 hour or even the daily or the weekly or whatever time frame it may be that you're using, doesn't seem like to you that it's retesting. It's not giving you an opportunity to get back in, right? So on this fib, for example, this gave us a second wick, which actually went higher than the previous one. So let's say if you were trying to use this rejection as your entry, putting your stop just above, you probably would have got stopped out on that wick. But that's not how we're doing it. We're not just doing it because it just looks like it's rejecting. We're then going lower to see what's happening. So on the hourly, you can see the huge wick rejections in this area. That's a good sign, all right? But what's actually happening? We go lower again. We look at the structure. 30-minute, higher high, higher low, higher high. And then obviously it's sold off from there. Okay, cool. Then we go lower. What happens next? 15-minute. Again, probably some sort of news causing this, don't get me wrong. But, this is where, again, your technical analysis is coming into play. You're in that 78.6 area and you're looking for rejections. You've got so many to choose from on the lower time frames. Right, and this is you just doing this for an entry. So you go to the 5-minute, for example. This might not be something you do, which is absolutely fine. But again, looking at this, what we got, rejections. Right, we're failing to make a high, closing above this. If anything, we had that final wick out, and then we started to sell off, which is fine again. All right, and as you start to break down lower low, this could be entry, right? Or even when it pulls back and taps into previous support and our resistance, that could be entry. And again, this could be something you fib on a lower time frame, right? So again, time frame wise, let's take a look. Significant high to significant low, 61.8 exactly before rolling off into your target. Yeah. So you're in on lower time frames. Now, don't get me wrong. I'm not here saying, go on the 5-minute and start fibbing, because as you can see, let's look over here, for example, we can take the significant high to low in this scenario. And as you can see, it's just still chopping around. That's the lower time frames. That's always going to be the case, right? If we take the significant low to high up here, You can see we came into that 78.661 area and took out both targets. It's very easy to just plot them anywhere, right? But again, you have to respect the general rule. We're taking the significant low, we're going to significant high, right? So we're not just putting it anywhere. We're looking at reaction. As you can see, prices did actually close below the 78.6 just about. However, continue to respect the price action and then continue to the upside. Let's see if there's anything else there. See if there's anything else we can show you. You saw already how obviously I used a fib within a fib. Even now, you could still be seeing this fib play out that we've highlighted here from last week, low to high. You could still see this play out down to the low, right? And go to those targets. Now, target-wise, how do we set those? Let's just come to the left again. So as I was saying previously, I think that's as far left as it will let us go, maybe. Yeah, so let's get this, and let's do this. So say price has made us move to the upside. Price has come into that 61.8. So say you're entering, but you're looking where you're going to put your targets. You might have a target over here, right? Double top area. Now you will probably might want to rate how price reacts. If so, and it doesn't react, it doesn't have a rejection and goes to your next target, fantastic. Same scenario, you're going to do the same thing. You're going to look at how it reacts. And does it not? If not, then you might hold to the next target. Or you might be one of those people who takes, 0.3% off here, 0.3% off there, 0.3% off there. You might be one of those people. It's all down to your strategy. These are where the things where using different tools is where it's going to be dependent on how it works with your strategy. Does it work with your strategy is probably a good question to ask first as well. Does this actually work and go in line with my strategy? If not, okay, do I bother adding this or incorporating this in, right? So because price could always react from the first level, just had a small pullback, blast straight through to the next one. Had a small pullback, blast straight through to the next one, right? That's very, very possible. Now, someone asked me a question which I will answer right now, actually. Okay, so this is something from actually the original Astro days that we learned at the very start. But here we go. So after you get one movement like that, which happens quite often, how do you know if price will go to the next one? Because price normally does pull back after it completes a target. What we then do, actually, or I've done anyway, on many occasions, is I've taken a fib from that new leg that's been printed, 61.8 to the target. And what normally ends up happening is something similar to the scenario that we printed right here, which is where price actually, if I can extend it further somehow, I can pull out sideways somehow, do something. Where price actually, don't know what's wrong with this. It's not my lucky day. Yeah, where price actually creates a new leg, and that is then fibbable, and then price actually comes down into the new 61.8 or 78.6, wherever it may be, to then go and complete the second target, which then actually is your minus 61.8 on the original fib, right? I got questions here? Put another fib on. Yeah, exactly. So another fib on there. Any questions on what we've gone over so far? There isn't really much else to go over. Just like any questions, or if you'd like a few more examples, maybe, just to go over anything. And please do ask any questions whatsoever. That is a good opportunity, and you can never know who it might help. It might help someone else who's also struggling but doesn't want to speak up. Or is that all clear and you can understand exactly how that one works? Very clear, that's good. GU, let me just add GU. GU, maybe this one will work. Yeah, that one works. Cool. If I was going to fib this, I would be looking at, for example, first things first, weekly structure, high, 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 low. So I'd take from significant low here to significant high, and I'd be looking, okay, it's reacted from 61.8, okay, that's cool, but there's still room for it to come to that 78.6 as well. So take that into account. Daily wise, similar thing. So daily's broken this structure here, the previous high, lower high, and made a higher high on the daily just here. So if so, we can then fib that if needs be. And as you can see, price has tapped into that 50% so far, hasn't tapped into that 61.8, 78.6. So, okay, this is literally how you just go about doing it. So on the 4 hour, we can see that the bulls have slowed down and the bears. So it's kind of in a range right now in this scenario. But over here, if you want to, this is a good example of how you could use these sort of tools to help you and mainly following structure. Remember that following structure, how many people have been taken out and had a really bad time trading the pound. But if you look at it, look, high, low, high, low, it just followed structure. So if we're using a fib now, it might not be as clean because it would probably close below the 78.6. But as you can see overall, then originally retraced and then hit target eventually. We then move this over to the left here and go for the next one. As you can see, tapping into that 78.6, 61.8 and going obviously for the minus 27.2. Get rid of that one. So now as we haven't made higher highs, but we've made lower highs, but kind of making equal lows down here, what can we see? So if we were then to use a fib here, we've rejected the 78.6, okay. And in this scenario over here on the left, it's rejecting that same 61.8. And if we'd move this, it'd be 78.6. So yeah, you can see how the fib's being respected here. And obviously second target actually aligns with the overall weekly 61.8. So here's where you can build some confluences as well. Now the structure hasn't actually broken just yet. We've just been not making higher highs, but haven't made a lower low either. So this is where either you're trading the range or you're sitting on your hands waiting for the setup. Do you recommend having two positions and moving up my stop loss to allow one trade to extend or TP2 or look to re-enter after TP1 on double top? That's where it's up to you. It's based on your strategy. It really has to, be based on what works out for you, right? What is, better for your psychology. Some people, by having two trades on it helps. Some people, by having two trades on it, it's more stress, right? So it's based on what's going to be more manageable and better for you. Someone asked me about GJ. GJ, very similar to GU, to be fair, lower low, obviously on the weekly here. As you can see, actually tapping into that 78.6, rejecting that. So it's a decent sign. Obviously, overall, you could actually just say, get rid of that one. You could say we're bearish overall, obviously, taking from significant high to low. And as you can see here, price also rejecting the 78.6. So what do you do in this scenario, right? What do? You have to take into account both scenarios because overall, a bigger picture, we're bearish overall, right? But then if we're going looking at more recent price action here, the structure is looking bullish, right? Only up to here though. Also still respecting and not breaking that high. So that's something to take into consideration. Daily, very similar to GU, just a little bit less, right? You can see how this I wouldn't call a higher low compared to GU. So this could really just be one leg. You can measure it the other way, right? So yeah, that's how I'd use fibs though. So if you go into the 4 hour on GJ, same thing. You can see that price was making higher highs, higher lows. So if we go here, you can see significant lows, significant highs, 61.8, coming just shy of that minus 27. That's why it's always good to have your first take profit as your 0% mark, because sometimes this happens, this exact scenario. Can you imagine being in this trade from here and being up 160 pips and then getting taken out break even or a loss? Be very annoying. But if you had your first target set at a 0%, you might have seen these first rejections, maybe taking a quarter off or 0.3 off. And then obviously, don't get me wrong, still be annoying anyway, losing out on a full trade of 160 pips, but at least you bank something, right? This is where, again, your strategy and trading plan is going to have to account and for these scenarios so that when they happen, you know what to do. When they happen, you've decided already ahead of time, this is how I'm going to react. This is what I'm going to do. This is my process for that situation, right? Good stuff. Any other questions at all? Like I said, shoot them across now. On gold. I don't trade gold. I noticed you don't place the fib on the absolute low of a move, but from the most recent run. Can you explain that? So yeah, I'm using significant low and high. So for example, I don't know where you would have seen that. So on the weekly, probably from there, I'm using the most significant. So I could go to the low, but that's all. It's not really going to retrace like that, right? Not in one go anyway. It's going to do miniature fibs in the middle. So why? Because especially because I know I'm not position or a hedge or swing trading. I'm doing intraday, intra-week. I'm looking at most significant price action to now. I'm looking at price action and analysis that's going to help me now. So I take the significant low. So I'm not going to go from say, randomly just here, up there, or up there. I'm taking the most significant low for this time frame, significant high from this time frame for now, where I can get some analysis and some data on now. What's going to give me confidence is now. And then obviously take my trade. So in this scenario on the daily, I might not use this fib that I've got on right now. On the daily, I might be looking at instead potentially, let's see on the daily, I could be doing this way from significant high down to the low, seeing as compared to GU, we haven't really got that lower high. It's kind of just from low to from the high point down to the low point here. I might be looking at something like that. Or if I'm on the 4 hour, I might be doing something like this. So it's the last significant high point over here, down to the significant low point here. And as you can see, rejected 61.8 and bounced off the 0%. It didn't reach the minus 27. And again, is looking like it's reacting from that 61.8 again, depending how we close in the next hour, 10 minutes, and obviously how we close for the day. So you can see how, depending on the time frame, and then obviously changing it a bit. What about GA? All clear. Riz owns gold bars only. Literally, that's literally all I do with gold. Use key levels to line up with TPs also, yeah. This makes a lot of sense, right? No worries, no worries. One thing I do want to highlight though is remember that the fib is just another tool, another confluence, right? So for example, if we can pull an example up, okay, let's use this one. So significant high, that's significant low. As an example, the 61.8, 78.6, as you can see, can align with this potential head and shoulders, right? If we were using that sort of candlestick pattern as a candlestick, as a confluence as part of our plan, boom. So that aligns with extra confluence. Also, previous resistance support could be resistance again. If so, another confluence. I don't know if there's any for the lower time frames. I don't know. One sec. Let's go 30 minutes or something. Let's see if anything else aligns in that same area. Yeah, so previous session high, Asia high, previous Asia low, in the same area. The confluence. So yeah, so you see how again it's not just using just the one. It's not just saying, hey, use this fib and that's it, right? Don't use anything else. If anything, the fib is used with the foundation, the structure first, and then obviously all the other confluences on top, giving you your entry, your TP, your take profit. So again, if your TP aligns with on that fib, with other complements such as support resistance, key levels, such as psychological round numbers, such as I don't know, a trend line or a channel that you're using, wherever it may be, extra complements for you. Yeah, fantastic. Let me just think if there's anything else. I don't think there is there. Any other questions though before we go? All good? Good stuff. Good stuff. All good from me. Fantastic. Fantastic. Glad to hear it. Well, if you do think of any questions, you know what to do. You can always message me or message your mentor. By all means, feel free to do so. The recording will be up later tonight or tomorrow at the latest, and I'll put it in both groups for now. But please all do try and join the new group and channel, so that will just be for recordings and webinar links. And yeah, hopefully we'll speak soon. I'm glad you all enjoyed. Yeah, no worries. All right, take care. Thank you.